Welcome. I am the Economy Cupcake. Today's economic update. Santa Claus is coming. Well, the town lit up with the news last week that interest rates were going to drop down to 4.5%. The government was going to affix the 30-year rates to be available for homeowners. But later in the day, it was discovered it was just another rumor from Hank Paulson's Treasury Department. The 4.5% rate was discussed as a possibility for future home buyers only. The government would agree to absorb part of the risk for the low interest rates or help with closing costs, or maybe they would distribute Christmas gifts to the poor children throughout the world. They are tinkering with the idea. While they are tinkering, how about coming up with viable solutions for homeowners to keep their homes? The voluntary programs that the government has suggested over this past year have failed dismally. It's disgusting. Because of the complicated agreements that the banks have with their investors, the banks are playing hardball and are only modifying to what's going to work best for the banks. Remember, the banks are the ones that got us into this to begin with. There's no principal reduction. The interest rates are only fixed for a few years. These same banks, because of their agreements they have with their investors, allow foreclosures to be wiped off their books, gone forever. But those that modify or short sale, they have to stay on their books. Therefore, that's why the banks aren't playing nice. And by the way, in Virginia, it's not about the subprime mortgages anymore. Those loans have already gone into foreclosure. At least most of them have. Now, homeowners with just plain vanilla loans are wanting modifications because, as a term, they are so underwater with their values. Now think about it. Property values, if you purchased in Arizona in 2005 in Maricopa, you were paying around $300,000 for a property. Those properties are now worth $100,000, if not less. Property owners may try to sell, but they can't because they'd have to do a short sale, destroy their credit in the meantime. I don't care what the banks tell you. It will destroy your credit, at least for 3 to 5 years. If principal reduction, that means getting rid of the principal that's already on the loan, along with eliminating qualifying process. If I live in my home and I've lost my job or had to take a lesser job, I'm not going to qualify for a new loan. Get rid of that. Let me just stay in my home, eliminate the principal down to what the current market value is, give me a 30-year fixed rate. That's what's going to save today's market. Santa, you guys up there that are trying to be so gracious and give us presents for Christmas, you need to come down from the North Pole. Come down here to the workshop with the rest of us. See what's really happening. Because guys, you don't have a clue. Thanks for listening.